Oh boy, oh boy, oh boy. Out to the Twitter land and see who's first in chat today. Let's see. Nobody up first yet? Okay. Everything in crypto is green, though. That is odd. Hey, Paul, how's it going, man? I don't know. It looks like a lot of crypto is waking up here. So you said you've got snow coming your way on Friday. Is that the same storm that we're at the tail end of right now? Because I know we were actually partly under a blizzard warning yesterday. It looks like crypto's waking up a little bit. Just kind of bounce through everybody here. Shib looking nice, coming back up a bit. Okay, new storm forming. What do we got here? So we got 2,300. I want to kind of pull back and... Oh, okay. Okay, so that's 24 hours right there. Yeah, we're not having the nicest weather up here in Minnesota. The good news is it is positive 2. The bad news is the wind chill's negative 13. Yeah, so it looks like a lot of crypto. There's Doge, Shib, Bitcoin. So it looks like everybody had the same artifact right here. The same serious downward push. So pretty much no matter what crypto you were in, that was a good time to buy right there. And of course that's on the 5-minute, but want to kind of have a look at the past 24 hours. So yeah, that's the look at crypto. Jump over on the watch list. PROG has in fact moved back down. Still kind of in that sell range. But of course, how much of that has to be adjusted now? I think that was 135. So I was going off that 135 because I know my last buy-in was at $1.27. Which is funny, I bought in before it hit the actual buy zone. But, at that point to average down, coming from, the 246, 264 range, dropping to $1.61. AMC did break through. Oh yeah, okay, we're on the 30-minute there. Didn't really. Today was another busy day at work. I hardly got to look at the market today. Now, you paid $1.33. Was that an average down, or was that your initial entry? I can't remember if you said you've been in Prague for a while, or if that $1.33 was just to average down, or average up, depending upon where your initial purchase was. Okay, so you enter it at $1.33. So, well, you're up 6 cents a share. Not too bad. Like I said, my average is still up at $1.61. So I'm below my average, but with how much I got at $1.27, I wouldn't feel bad about selling. If I was going to be swing trading, I would feel bad about selling in this $1.50, $1.60 range. We still got Tesla up on the list. In fact, Tesla crossed over on the day. That's interesting. SPY was down. Let's see, I'm kind of... AMC down 8% today. Yeah, not much green today. Not much green today, and the things that are green, most of them are fairly close to where they opened at. So it looks like the market as a whole either traded sideways or went down today. I do have... Yeah, it looks like Consolidated Edison, Arbor, Realty Trust. Here's an interesting one for you. Material sector. I actually had 2 in the green today. Not a whole lot of movement. Oh wait, what are we looking at? Goes back to the 18th. These ones read funny. All good buys. Yeah, if you got extra cash, yeah, it is definitely it's a buying time. That's people are always down on red days, and part of it is if you know what you're doing, you make money on the red days. Granted, anything you hold, any long positions you hold are down, but the opportunity to sneak in, make some cash, they're all over the place. Yeah, so this is Uranium Royalty, and they actually closed out green today. And the other one, URG, and these are both ones I actually hold. URG also green today. Energy, which is another uranium. So it's kind of interesting that with everything going on in the Crimean region right now, that uranium stocks would be up. And for those who don't know, uranium is not only used in power plants and such, it is also, in its depleted form, it is used in high velocity, high density armor piercing tank rounds. So I kind of want, makes me wonder. Let's bounce around here. We're going to check a couple stocks here. I just want to kind of have a look at some of these and see how they're doing. Just see how their days were. Lockheed Martin, not a lot of excitement. Lockheed Martin. Wait, no, E. Boeing. Boeing traded down today. Lockheed Martin, Boeing. Northrop Grumman. Yeah, no real big moves going on in the three major. For those who don't know, Lockheed Martin, Boeing, and Northrop Grumman, they're three of the larger military contracts as far as aircraft. They're companies that seem to do well when there's conflict going on at different places around the world. So I was just kind of interested in seeing what some they get a majority of the military defense contracts. So looking at not a lot of volume coming in, not a lot of no super drastic run-ups or anything like that. And some of that would be indicative of politicians using inside trading, knowing about different things coming up. I have IVR. We'll look at IVR. I am not familiar with that ticker. Invesco? IVR. Interesting. Let me jump over here. Oh, IVR, not IVE. Invesco Mortgage Capital. All the hype this morning is about D. Yeah, I saw a huge number of people downloaded it. So IVR, dividend yield, let's go. Okay. Couple things. IVR, dividend. Where's NASDAQ.com? Now, Paul, how long have you been in IVR? Is this one you've held for a while, or is it a recent entry? So what do we got? This is going back to... You've been in it since December last year? Because one thing you might want to... I have... I've talked about my experience with Credit Suisse. They had super good dividends, but they could not maintain their price. So if you got in December, are you able to look and see what date you got in on IVR? What day in December you entered? Because if we look, So they pay out 9 cent per share dividend. And it looks like, so they pay 9 cent per share quarterly, which means you're earning a dividend. If you break it down, you're earning 3 cents a share per month. If you look at it, we will go from the beginning of December. Beginning of December, they were right around $3. Beginning of January, their shares lost 13 cents since there. 12.16. Okay, so 12.16. So on 12.16, they opened up at 294.5. They closed at 291. So we're going to go from the 16th of December to the 16th of January. Or as close as we can. So the 14th or the 18th. All right, 16th. So best or worst case scenario, you got in at 291. Oh wait, I thought I was on the daily. Derp. There we go. Okay, 16th. Okay, 291. 18th. The best you're looking at, the high, was a 9 cent loss. Come the next month forward. Oh, what was that anyway? On the 18th. So we're going to call it close at 271. Close at 250. Yeah, close at 255. So you pay 296 a share. So you have not seen a dividend yet, or you may have seen a dividend, depending upon when their ex-dividend date was. Looks like it was 110. So you might have gotten your first dividend of 9 cents per share. But since you've bought them, even if you just go off the 2 months later, you've already lost 66 cents per share on that stock. And the reason why I bring this up is because Credit Suisse paid out an amazing dividend. They were paying out 20-25% dividends, but their share price was falling faster or harder than the dividend they were paying out. And they were paying out a monthly dividend. So this is one of those things you should definitely be careful to make sure. Yeah, because there was their dividend date 1st of January. Or 10th of January, sorry. But as you can see, going back, and we are on the daily here, they had a huge spike up for some reason back on June 6th of last year, and then they started to fall, and they kept falling. So this one, I would be careful. Of course, it ultimately is your decision, but if you look at the trend of how the stock has been falling, it looks like they've got they got a high dividend. Now, if you go back to July of 2020, their dividend was 2 cents per share. That actually fell off. They were 50 cents a share before. So something pretty major happened. They had a huge dividend. We're talking 42 cents a share, 45 cents a share, 50 cents a share. And then it dropped down to 2 cents. 2 cents, 5, 8, 9, 9, 9, 9. So they've been running at 9 cents a share for quite a while, but it's only a quarterly dividend, and their annual dividend currently is 36 cents a year per share. Well, if you look at it, they've lost in the past 2 months. They've lost 66 cents. So they're losing more per quarter than they're paying out in dividend. The only dividend I see is Apple on my Robinhood app. What do you mean by the only dividend that you see that you've seen paid out? Because if you got in on 12/16, you should be seeing their dividend. You should be seeing their dividend because their ex-dividend date was January 10th. Unless they announced it before you got in on December 16th, you should have seen a dividend of 9 cents per share from them for the quarter. But yeah, as soon as I saw that 15% dividend yield, I immediately wanted to look and see how far their share prices fallen, because I don't think, based on with how they're falling, and this is not just as a result of the market pullback we saw in November. If you look, it actually started further back. They came down, which they might have done. It might have been a stock split. Looking at when they go from 50 cents a share dividend down to 2 cents a share, to me that screams there might have been some kind of a stock split that went on. And that was between May and July of 2020. So, yeah, somewhere in this period. Yeah, if you look, their stock was way up, $18 a share. Either they got caught up, like serious in the unpleasantness, which is at the same time. If you look at it, we all know what happened in March of 2020, and that is it. That's that time period right there. So they were up around $18.30 a share. They fell. They dropped down. They hit a low of $1.82 a share. And their dividend went from 50 cents a share down to 2 cents a share. I got paid. I will look more. Yeah, it's of course at this channel, we're just friends looking out for each other. But when I see, looking at their dividend. Their dividend disappeared from whatever this was. I don't know if they just happened to be doing a stock split at the same time, or if they got hit really, really hard. If they got hit really, really hard during the unpleasantness of March 2020, and they just have not. They've had a couple excitement spikes. June 8th, they had a lot of excitement there. They had excitement on, that would have been April 8th. A little bit of excitement January 27th. A little bit more excitement on June 9th. That's interesting. June 9th. June 8th. So a lot of excitement on the year. Not as much the second time, but those dates are only separated by 1 day. So that I would be doing a little bit of looking into what that was. But yeah, they right now their dividend at 15% looks good. When you look at the price of the share and 15% dividend, it's easy to see the money before your eyes. But when you look at the fact that with how their share price is going, it is not sustainable at this time. If I had a position, it would be a small one, and just in the hopes that they rebound after all this. Because if you look, at this last push down does coincide We got the start in November. They started the downward trend. They might have just gotten caught up in everything else. They might have been on an upward recovery, but it only went back to August. 8 is August. They were trading kind of sideways, started to come up a bit, and November hit and they just got beat down. As soon as November hit, they started to run downward. And of course, I don't want to scare you off if it's something that you're interested in, and if it looks good to you, if you research it and you see that they might be coming back up. But for me, I just see warning signs. So you just have to be holding the stock prior to the shares have to be settled before the ex-dividend date. So if you're buying shares, looking at it, so their last dividend was on the January 10th. So I would be looking, let me get a calendar, look around April 8th. So as long as if you're looking to get shares of them specifically, April 5th, you would have to have your buy-in. Whatever, if you go on, here's, so basically what you're doing, Paul, if you take, you can do this on regular Google. Take a stock that you like. We'll go Orchard, ORC. So I'm just typing in Google, I'm typing in ORC dividend. When it comes up, I'm looking for the tag to, it'll of course, and I'll show you my screen here. So it'll give you a look like that. It'll just give you kind of a stock, I'm horrible with the camera. It'll give you a stock rundown, but if you scroll down, you'll have the www.nasdaq.com. If you click on that, it'll actually tell you when the ex-dividend dates are, and some of them will even tell you. You can kind of see when the next date will be, or you can look at the history to see about when they pay it. So if you could figure out when they're paying paying out, if you buy 3 days before they're going to pay out their dividend, then that will give you that'll give you your T+2 for your shares to settle in your account. And as long as you have the shares before the dividend is announced, you claim that dividend. So yeah, if you buy it a week before the not the dividend payment date, but the ex-dividend, the ex-dividend date is the day that they assign or allocate for all the dividends they're paying out. So as long as you purchase 2 to 3 days before the ex-dividend date, that dividend's yours. And that's real important, because there are stocks that pay monthly dividends. I've posted a list of them to my Twitter account. If you're looking to get in on those, it's now here's the thing: if you're not worried about capturing the dividend, one thing that happens is when they pay out dividends, usually you'll see the stock price fall just a little bit. So if you're looking, if you actually buy the day after or the day of the dividend, sometimes you see the stock price dip and you might get a little bit cheaper. You miss out on the dividend for that period, whether it be the quarter or the month. But yeah, if you're looking to just get in and capture dividends, you want to get in, probably about 3 days before the ex-dividend date, and that'll give the shares time to settle. And also, Paul, that is one thing to be wary of when you're dealing with options. You'll hear people talk about getting early assignment. Some people will actually go through and they'll execute their contract early if the stock price is good. in order to capture dividends. So if you're going to be playing, if you're playing options, be aware of if the stock has a dividend and when the dividend's being paid out. Because if your expiration is the same time as the dividend payout, you do risk early assignment on some of those by people trying to steal dividends. Not a lot of people in chat today. We're kind of having a little one-on-one market time here. Now, I know Invesco has other things. Yeah, Invesco Mortgage. They actually have a couple different. Not sure what these other ones are. Yeah, it was actually funny there for a while, Paul. One of the guys I work with, I was always, I'd be telling him about dividends all the time because that was the key part when I was starting off was, building a good, strong, long-term dividend portfolio and using DRIP to my, the dividend reinvestment program, using that to my advantage. So yeah, I'd be like, yeah, got another $2 monthly dividend on this stock here, and some of them are still doing pretty good even with the market getting pushed back, or with the pullback in the market. In fact, let's kind of interested in seeing. My dividends are always just kind of hanging out there, and I don't worry too much about them. Looks like I got some small dividends coming in. I've got I got two interesting ones coming in here soon. Yes, when I say I have ED, it's Consolidated Edison. There have been jokes made on Clay Rose live stream when I start talking about ED. So yeah, Consolidated Edison. I am actually, now this is a quarterly dividend, and I am getting 79 cents a share. And I like the share price going up. Hopefully, when the assignment or amounts have already been. Yeah, hopefully. I do kind of like to see a little bit of a dip down when my dividends get paid out, just because it gets me a little bit more. But I, of course, always want my shares to go up. And let's go ahead. Another one. And this ExxonMobil is paying out 88 cents per share. Now keep in mind these are, these aren't $3 stocks, so it's 88 cents a share on an $80 stock. That's pretty decent. Not vile and wretched. Yeah, it looks like their annual dividend yields 4.51%. So that's not too bad, especially for something like ExxonMobil. That's there are certain stocks that everyone's heard of. ExxonMobil, Apple, AT&T. There are your stocks out there that you can list off 20 key stocks, and your average investor might have, you know, might have one, two, three. You know, they could have quite a few of them, and those are just, especially if a stock is what's referred to as a dividend aristocrat, and that just means they're a stock that has consistently upped their dividend for a certain, I think it's like 15 years. It's like I know for the longest time AT&T was a dividend aristocrat, and I know that they got they actually got taken off the list because they cut their dividend. Now, if you're looking for, and we'll pull it up and have a look at it. If you ever play with ETFs, we got Pro Shares. We're on the daily. Yeah, see, they're having a little bit of a pullback too. So this is the Pro Shares S&P 500 Dividend Aristocrats. So this is an ETF that all they invest in just stocks that are dividend aristocrats, companies that have increased their dividend payouts, you know, for a certain period of time. And let's go and see. So yeah, their dividends do float around a bit because their dividends based on the dividends of other companies. But looking at it in January, only 63 cents a share. Yeah, that's not that good. Yeah, it's just everything's getting hit so hard right now that it certainly is a buyer's market right now.
Are you broadcasting?
Yeah, but if you wanted to shut the door, if you wanted to go through and shut the door. But yeah, so this was one of those ETFs that a lot of people like to get because, you know, the part of being a dividend aristocrat is the fact that you're increasing that dividend payout. But looking at it, you know, they're getting hit just like the rest of the market. And let's go back let's find the unpleasant. Yeah, if you look at their share price, this pullback really, they were just shy of $100 a share. But when you go further back, we're still on the daily here. So there we are. There is the unpleasantness in March, and for them it actually continued almost for the entire month of March. Actually started a little bit before. And so they dropped down to 48.62, and if you just look at how much of a climb they had, pretty much doubled up over the time period. They are in a pullback right now. But this is one of those stocks that if the market, you know, figures out what it wants to do and, you know, pulls itself together. And see, a lot of people will definitely tell you, you know, go in on the SPY, that, you know, buying SPY and holding SPY long term is the way to go. So if you look at the growth that it's had since the unpleasantness, it's pretty much doubled up over that time period, but it has a higher dividend yield than the SPY does. So we've got Noble up there. We're going to click over to the SPY. You know, it's a SPY. It has much similar, you know, a similar movement over that time period. Now, if you look at the share price going from 218 up to just shy of 480, that they have more growth, and that's, you know, with the SPY, that's what you're going for, rather than collecting dividends or quick in and out. What makes Noble the dividend aristocrats better is if you are looking to play the covered call. So rather than paying almost $500 a share, you're only paying $100 a share. So you're getting it a lot cheaper, which means that if you're a person who's looking to play options in the long run, now of course you're still looking at, in order to get 100 shares, you're still talking $10,000 at $100 a share. We'll jump back over to Noble here. Oh wait, no, I messed up. So we're currently at just under $91 a share. We can jump over to the option chain here. So their options, March, April, yeah, their chain's not filled out as well. In fact, that is a huge spread between the bid and the ask. So yeah, if you had 100 shares, which we're talking $9,100 for lack of better terms, you could easily sell covered calls at $92 a share and be picking up $132 a contract, which it is not that much when you look at the actual investment that you have. You'd be better off so currently AMC, even if it was $20 a share, for the same value will go 8. Yeah, even if you're just talking about 400 shares where you do 4 contracts, you're still getting more than that just playing $18 covered calls, and that's for less money. So yeah, they're just little things you can look at here and there. Still hanging out, Paul? I don't know where is everyone over on Claybros right now? Is that where everyone getting ready for the AMA going on tonight? How are AMC covered calls going? Oh, yeah, Paul's still here. $8 p.m. Eastern, so 7 my time. Okay, so about another hour from now. Oh, it is a short week, yeah. Yeah, so I don't know if you noticed the title of the video, ready for the short week. With everything going on around the world right now, this week could be another example of them using downward pressure in the market to try and push the price a little bit further down. So yeah, what I was kicking around the idea. Oh, we don't want that. I was just kicking around the idea of some covered calls. Just to make a couple bucks here and there. That's for next week. Problem with PROG is the price is so cheap that you can see, the next covered calls up are only $4 per contract. So you're basically looking at a share price of $1.54. Going an additional week out, $10 per contract. So it's kind of hard to justify covered calls on PROG. AMC, on the other hand, if you're playing smart with your stop losses, and I will go in. Oh wow, I'm still on that. Go on the minute. So we got 1 day. Okay, so that is 1 day. Tighten this up just a little bit. So $2 spread. Go back another day. Doesn't count. About $1.50 spread. So I'm just kind of looking to see how much movement they're really getting in a day. $20. So yeah, looking at it, 1647. What kind of run up are we looking at there? If they can push AMC down to under 15, I'll buy more shares. Well, let's look at how dangerous AMC at 15, or look and see where they're at right now on the options. We are on the call side of the house. Really, if they can push us down and it doesn't cost them too much, they might do it. They might try to just get us under this 16 mark. But when you look at it, you're not looking at too many contracts in the money here. So you kind of have to, look at the numbers to figure, is it more cost effective for them to push us down for these, for as many options that would be in the money, both on calls and put side of the house? Or maybe should they save their powder up to a week when there are more options that are a threat? Because let's see, this is, not many options there. Let's go to the monthlies in March. Now remember, all these that you're seeing that don't have any open interest, these are newly created strike prices. See, they'd be more inclined to hold us below a 10 to 11,000 mark than, say, a 1,000 or an 800 mark. That was the only thing I was getting at with that is, it may not be worth their money to try and hold us below that. They may try to get these 1,000 contracts out of the money. But, a lot of those, and then you got to look and see, that people are waiting for gamma squeezes. Well, there have to be a lot of contracts for a gamma squeeze to kick in. And we've got to get back up to the $20 mark to even, begin being a threat for that. Now, if you add all these up, it is a lot of contracts, but they can take it, one level at a time. So I almost wonder. Yeah, maybe if there is a run-up. So right now what I'm looking at is on AMC at the $18 mark, we've got close to 5,000 contracts. If you look at the levels below, you're not seeing much there, less than 3,000 contracts. But you get up to here, you hit 4,800 contracts. Oh, hey Simon, welcome to live stream. I should have known when I saw it out of the corner of my eye. I saw it popping up higher and higher. So this 18 might be a mark that they'll try to hold us to for Friday. So I'd be looking to maybe see if tomorrow during the initial excitement, if we get a push up to 1750, 1775, I'd maybe be looking to see what this premium, see what the midpoint for the $18 strike, see what that hits to. If that gets up around $40, $42, $45, it might be worth selling some covered calls at that point, knowing that they might try to push us back off that 4,800 contracts. Yeah, no problem, Simon. Glad you could stop by, man. Paul and I have just been kind of hanging out and going over a couple things. Now, see, here's the funny thing, Paul. So, if this runs up, even where it's at right now, say they run this up and it ends up being $33 a contract, and they push the price back down, pretty much for every contract you open, you can buy another 2 shares. Now that's if you hold it all the way through, if you don't capture, if you don't do an early capture on profits or anything like that, or if you don't get stop lossed. If you're setting stop losses, which you just got to look at, how much you're willing to risk on it. Now, knowing my luck, as soon as I sell covered calls, we would shoot up to like $30 a share. And I'd be looking at like, really? You had to do that? That's why sometimes I like to be cheeky, and I will actually, depending on where the price is at, and if I see an upward channel that is not sustainable throughout the day, I'll try to time the top tick and sell my covered calls at the peak of the day. We can actually, we'll jump back over to the chart for this. So let's look at a really, really good day for this. God, this wasn't a bad one at all. Let's see if we can just get a little bit better of a setup here. And this is Monday morning quarterback, of course. This is, going behind after the fact. Yeah, we'll just use today. So we're going to do that thing where we assume, So we're assuming today is Friday. Today, all the contracts are going to expire. At 3 o'clock they all lock down. Sometimes on a Friday, if I see a huge run-up that I know is not sustainable throughout the day, especially if it's around a key level that I know that they don't want it to close above, I would actually go through and wait and see when the downward pressure starts. And so it ran down, or it ran up, pulled back, popped back up, and then started dropping again. So it was the beginning of a downward channel. There are days I will actually, in this range right in here, I will sell my covered call for the same day it's closing. And we're only talking a couple bucks here. Maybe each contract getting $8 to $10. But if I know it's a day that they will not let us, they don't want us to close above a certain price, I'll enter in a covered call right here and just watch as it gets pushed down and bleeds away. And the whole time I'm theta's working to my advantage also. So there are days I will get cheeky and I will grab I'll grab an extra $10 here or there, just not the whole position. You got to be careful about risking your whole position, but take a part of it and just grab a couple extra bucks. Looking at it, if they drop us down to $15 a share, well, if I make $30 worth of premium, then that means I can turn around and pick up another 2 shares. That whole nickel and diming to increase your share count. But Paul and Simon, I am gonna go ahead and wrap it up for the evening. I gotta go get a shower, get dinner, get all that type of stuff. Get ready for the next day. Uh, Before I sign off, any last questions before we see each other tomorrow? Any questions pertaining to specific stocks? I know we were talking about the one dividend stock you had earlier, and hopefully I'll be on tomorrow at noon or around noontime, my time zone. I am just waiting for tomorrow morning because that thing we don't talk about ends tomorrow, and I'll actually I can speak on it after tomorrow hits. That's Oh, you're welcome, Paul. I said, it doesn't matter if there's, a couple hundred people in here or five people, four people, one person. If there are people who are still interested in the information I'm putting out there and still want to come out and be interactive and communicate back and forth, I'll keep on doing this. But of course, if y'all know anyone who's interested in the channel, tell them to check it out. Hit that subscribe button. Get that subscriber count going higher. But Paul and Simon, thank y'all for popping in, spending a little bit of time in your evening, and I'll see y'all tomorrow on Clay Bros, and just want to wish everyone good trades and good health. Yeah, you are welcome, Paul. But everyone, hope you have a good evening.